Hello everyone, my name is Josiah Willis and I'm here with Matt Carlson from Evergreen Home Loans. I'm a real estate agent from Caliber Real Estate. I help people buy and sell homes, but I also do the investing side, which Caliber Real Estate is a little bit different on. I help clients all the way from your average family looking for a home or wanting to sell their home, all the way to investors who are wanting to invest in off-market properties, foreclosures, REOs, short sales. We do it all. And one thing I like to say is not all real estate agents are actually created equal, not from a value standpoint, but just from experience and what they know. And it's the same thing for loan officers as well. And so that's why I'm here today with Matt Carlson from Evergreen Home Loans, who's a loan officer. And he's a friend and colleague of mine, and he's been in this business for quite some time. I'm going to let him share a little bit about his background and why he got into mortgage lending. And then I'm going to actually ask him some questions regarding what home buyers, first-time home buyers, experienced home buyers might run into on the lending side of things, and why it's important to actually speak with the loan officer prior to going out and searching. So hopefully we'll answer some of your questions today, and I hope you find this useful. It's a pleasure for me to be here with Matt. So without further ado, here's Matt, and I'm going to give him a chance to kind of explain his background. So Matt, why don't you take it away?
Hey, I'm Matthew Carlson. I work for Evergreen Home Loans, and just a little bit about my background. I've worked in the industry for a long time. I've done various jobs in the industry, and have a lot of experience. The reason why I decided to pursue a career in the real estate industry and the mortgage industry is because it gives me the opportunity to help people every single day, and just the feeling that I get when someone closes on their home and I see their excitement and their happiness, and I know that I help that person in such a stressful thing. It's a great feeling for me, and really it's why I do what I do. And helping people achieve the dream of home ownership is special to me, and I think it's one of the greatest investments that you can invest in today. And I'd like to make it my mission to make that dream a possibility for as many people as I possibly can. So
nice, thanks, Matt.
Yeah.
Let's get into the questions now.
Okay.
All right, so moving on. Can you tell us how a borrower's assets, income, employment, credit factor into the loan approval? Specifically, what kinds of assets, income, employment history, and credit factors apply to the approval process?
Absolutely. So when we're looking at your application, we're going to evaluate all those things that you just talked about. We're going to look at your asset statements. We're going to verify how much money you have, and there's all different types of asset statements out there. There's IRA, which stands for investment retirement accounts. There's all different types of those. There's 401ks. A lot of people have 401ks. There's just basic checking and savings, and those can all be factored into a loan decision.
Okay, so from an income standpoint, can you explain what qualifying income is and what income that doesn't qualify into the approval process?
Yeah, so there's all types of different income. There's all types of different income, and depending on the type of income that you have, it can be looked at differently. So, if you're an hourly wage worker, let's say, do you have consistent hours every single week? And if you don't have consistent hours, how long have you been on the job for? That can be determined in different ways depending on the loan program that you're looking at. So, for instance, if you're going FHA versus conventional, that can be looked at differently. If you own your own business, or you're a 1099 employee, meaning you're work for yourself basically, like all real estate agents are, we're going to look for a 2-year history of that. 2-year history of that, and we're always going to be looking for consistency no matter what we're looking at as far as income goes and job status, and typically we're going to be looking for a 2-year history at the same job or in the same line of work. Okay. There are always extenuating circumstances, and like I said, every single transaction is different. So, salaried employees, they're nice and easy. Hourly workers, self-employment, any 1099 employees, that can be a little bit trickier. It really just depends on the loan program that you're looking at to determine how we're going to evaluate your income.
And there's some other forms of income like alimony, child support, dividends, Social Security, and stuff like that that come into play as well.
Right, those can all absolutely be factored in.
And as well, rental income, right?
Rental income, yes. Okay. And it depends, how long have you had that rental income. It just depends on the specific situation, but we can absolutely use rental income.
Okay. Great. So in terms of the assets category, can you explain, and I'll actually read from some of these and see what you say about them, but so savings and checking account can factor in, IRAs, 401ks, other investment accounts, stocks and bonds, about gift funds, like from a family member, can that factor in?
Absolutely. So gift funds are absolutely allowed. They do have to be from a family member.
Okay. It's not a friend.
Simple.
Has to be a relative.
Has to be a relative.
Okay.
And they're used all the time. So if you think you're alone by getting a gift, you're not. Gift funds are frequently used and very standard.
Okay. And then like the sale of personal property or down payment assistance programs can factor in too.
Correct.
Sale of real estate. What about collateralized loans?
So we're always going to factor, even a 401k loan payment, we're always going to factor that into your debt to income ratio. When you say down payment assistance, we're not going to count that as an asset because that's not an asset.
Okay.
We're always going to look at what the underwriter is looking for is, does this person have enough funds to cover what they need to do? Do they have a history of having those funds?
Right.
That being said, gifts are absolutely allowed. If you sell a car that you own and you can show the documentation for that and you sell that car, that can absolutely be used. To go further into that, anytime there's a large deposit on your bank statement, it's always going to need to be traced and verified. Okay. If you're making a couple $1,000s every single week and we see a $10,000 deposit on your bank statement, we're going to need to know where that's come from. And the reason for that is just to stop illegal activity or money laundering or anything like that.
Sure.
So
I've also heard it said that education can factor into history. Is that like, say you're been in your current job for a year, but you were in school for the last 4 years prior to that, that can still factor in, and it's not like you're cut high and dry, essentially, right?
Absolutely. If you're going to school and you get a degree in something and you start working in that field, we can absolutely use that.
Okay.
So, that kind of goes into every single scenario is different, and you really never know until you talk to a loan officer.
Right. Okay. What about credit? Can you speak a little bit more about credit and what the typical credit FICO score needs to be?
Yeah. So there's a lot of questions and also myths surrounding credit as well. What we're going to do is we're going to pull your credit score from all three bureaus, that being Experian, TransUnion, and Equifax. One big thing with credit is there's a lot of services out there, like Credit Karma or one of those. A lot of credit card companies offer you to show your credit score. Those oftentimes are not 100% accurate from what we pull. I don't know the reason behind that, but I'll always tell someone if they think that they know their credit score, I'll always tell them sometimes it comes back way better than that, sometimes it comes back a little lower than that. It really just depends on the situation. But to answer your question about like a minimum score, typically we're gonna look for something that's 620 or above. That doesn't mean that you can't get an approval if you have a credit score lower than 620. We have very few overlays at Evergreen, and when I say overlay, I mean additional underwriting requirements that aren't listed in the guidelines. And we're approved with, all the government agencies, FHA, Fannie, Freddie, Ginnie, and we do VA loans. All those have different guidelines.
Right.
And when I say overlay, it's an additional guideline that's not listed in those guidelines. FHA guidelines might say that you can get a loan at a 585 credit score. It just depends on the situation and the scenario, the loan program. A lot of people have nerves about their credit score and about their credit report. And what I usually tell people is, if you're serious about buying a home, you need to know where you stand. And if you come to me, I'm always going to tell you where you stand. I'm going to tell you how you can qualify if you don't qualify right now. It never hurts to try. It never hurts to know that information.
Right.
All you're doing is arming yourself with information of knowing where you stand and what the possibilities are. So if you've had, circumstances in your life that maybe hurt your credit score a little bit, that doesn't mean you can't buy a home. And I'm always going to do everything I can to help people achieve that dream of home ownership. So, there's no specific credit score that you need. Pricing, when you're looking at like interest rates and all that,
right.
Your credit score is going to affect that.
The cost of capital, essentially.
Exactly. Yeah. So, that something about interest rates that I just want to tell all the people out there that are watching this. We are still having historically low interest rates. Historically low. Right. If you look at a 30-year history of interest rates, you'll see that we are still historically low. And my prediction and most economists' predictions out there is that they're going to continue to rise. We're in a rising rate environment. And now is a great time to take advantage of those low interest rates.
Yeah. No, I mean, you're totally right. I mean, I was just speaking with my uncle the other day, and he was saying that their first house, that was a mobile home, on a piece of land, was a 10.25% interest rate when he first got his first place. So we're really far away from that at this point. And like Matt said, we've been used to like 3.5% for so long that we thought that was the norm. It's not, but we're still on the low side of things, so it's still a great time to jump on board with buying a house. So I think that about sums it up for questions. Matt, thanks again for allowing us to question you on the home buying process and what's involved. And I hope you all learned something from that today. And please give us a call if you're in the market for purchasing a home or even selling. But give me a call, 360-560-8073. I'd be happy to help you. Matt, you want to give me your phone number?
Yeah, 206-409-4867. You can also reach me at mcarlson@evergreenhomeloans.com.
Perfect. Thanks, everyone.
Take care.